Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guests are Jackson Stith and Simen Ruge. Thanks for being on the show, guys.
Thanks, man.
Thanks for having us.
Good to be with you.
Prior to co-founding SyndiGate, Simen was an investment banker in London responsible for selling and executing securities and transactions totaling billions of dollars. On the other hand, Jackson had a successful career in real estate acquisitions and development, working with several highly regarded real estate development firms throughout the United States and Dubai. At SyndiGate, they focus on recapitalizing LP and GP equity positions in real estate investments and specializing in secondary middle market commercial real estate equity. Guys, welcome to the show. I look forward to just hearing a little more about what you all do, right? I think there's going to be many listeners that are intrigued by your business model, and give us a little more about your focus, and maybe you can provide an example or two of your business model.
Absolutely. Look, I mean, maybe we just to give a little bit of context of, look, we came at this from different angles. So I come from the securities industry. I'm not a real estate guy by background. Worked in London for 10 years, moved to the US because that's my wife's American. Decided to settle down here in Miami, where we're both based. And that's when I met Jackson. He comes from a different background than me, but he described to me a problem that he'd come across in industry, and that kind of set us off down a path of first exploring the problem and then trying to find out a solution for it. Maybe Jackson, you want to give a little bit of background and where that came from?
Sure. So, my background is all real estate acquisitions and heavy development experience. Over the course of my career, I put up about 9 million square feet across all sorts of markets in the United States, Las Vegas, Miami, New York, and then did some work in Dubai as well. And for my own book, I did a few syndications, value add opportunities, multifamily, and I attracted partners that put in the vast majority of the money and had stronger balance sheets. And when it came time where I thought it was time to sell because cap rates had compressed and we had made a lot of money on paper, I wanted to, get some liquidity for that. They wanted to hold on to the projects. They wanted to hold on to the assets for an indefinite period of time. And they said, you're welcome to sell your positions in these projects, right? We won't stop you from doing that as long as whoever's stepping in for you is a good person and meets the background checks and so on and so forth. But I went out and I scoured the world looking for that service, and I couldn't find it, and discovered that one of the biggest problems in real estate syndication is that there is no secondary liquidity for these very, big financial positions. And in a lot of ways, it's an untapped market. So I started this business with Simen in order to try to solve that problem. Right. So it's something I experienced directly, and something after further research, especially by Simen, we discovered was a pretty big problem in the real estate industry in the United States.
Nice. Well, before we dive into that, would you elaborate on that problem a little bit? Maybe give an example,
Sure.
A little more in depth there, and then let's talk about how you all are solving it, obviously.
Absolutely. Look, maybe I'll take this one, Jackson.
Sure.
So like you put together real estate syndication, you put a lifespan on the deal, say 7 years, and in the span of 7 years, a lot of things can happen. So let's take a classic example: multifamily deal. A couple of different LPs are in the deal. Let's say that one of the LPs has a life event, like it could be death or divorce or something like that. Very simple. We've come across an example like that in California recently. The investor passed away, and his heirs inherited, a couple of, his kids basically. They don't want to hang on to it. On the flip side, they're a minority interest in the deal. They can't really go to the GP and say, hey, we'd like you to sell the building now. Still, they don't want to wait around for the next 5 years. So that's when you can come in and you can say, okay, look, can we find an investor? Can we do a bit of matchmaking, find an investor that's, appealing to the GP that can take up that position and kind of step in the deal instead of them? So that's your most basic example. And then it kind of broadens out to like, I think what we found is that there's a lot of problems in the equity part of the capital stack, like both LP driven and also GP driven, right? Another example is, it's difficult for GPs to find enough capital to work through their pipeline. So you get to these problems where, they have a whole bunch of projects they want to get going with, but a lot of the capital is tied up in legacy projects. So one of the ways you can free up is to get new investors in and kind of sell off some of that additional equity you have lying around. So that's kind of like the two sides of what we find. And that's kind of a neat example for explaining it, but there are just so many different flavors.
No, that's very interesting. How do people find you if they're in that predicament? How do they reach out, know of you all to say, hey, they could help me with this?
So I'll handle this one, Simen. Sure. I mean, we're easy to find. We're on LinkedIn. We have a website. It's important also to state that we are registered reps of a broker dealer out of New York City. So, SEC and FINRA compliant, so on and so forth. So this is all above board because they are technically securities. These positions are technically securities, and we want to do this the right way. So we went through the things we had to do to get those licenses. But I think kind of, I don't know, philosophically or historically is a better word. It's always been in the mindset of passive LP investors that once you're in a deal, you're in a deal until the GP decides that deal is going to be sold or refinanced and they're capped out in that way, whatever the case may be. Or historically, you go back to the GP if you have a life event or just want out of the deal for whatever reason. And the GP really has in 99% of the cases, the GP has the right to say no, right? You're here and that's what it is. Now, sometimes the GP may offer the other partners, and there's in these documentations, sometimes there's right of first refusal by the GP, right of first refusal by the other LP partners in the deal about when you're going to sell this position, who it goes to first. And there's sort of a waterfall of that or order of operations. So traditionally and historically, these have been sold back to the GPs or the other LPs in the deal, but historically also at discounts, right? So for over 100 years, because the first syndication was really like in the 1930s-ish, almost 100 years now, it's just been in the mindset that you either sell back to your partners or you just you're stuck in the deal. So there's a real sort of educational process that we're going through right now, just in the industry in general, saying, actually, there's a third form, and that is to sell to an outside investor. But you need someone who knows those outside investors, and we arrange those conversations and package the deal because most of the time it's just piles of historical data, the P&Ls from the last however many years, the K1, so on and so forth. And you kind of need to package that information up in a marketable package so that investors have a very quick, easy way to understand what they're looking at, right? So we do that work. And to go back to what I was saying, really right now we're in a kind of this period where we're trying to educate the market and the people. And this is why, it's great to appear on your show, say, actually, there's a third way to do this. You don't have to necessarily sit in a deal you want to be in anymore. You don't have to necessarily sell back to your GPs and other LP partners in the deal probably at a discount. You can go out and try to find someone to replace you in the capital stack. Right. So, we're a fairly new company. We've been out of the gates maybe almost a year now. And, we're in the process of kind of putting ourselves out there for people to understand that they should have a conversation with us.
No, that's awesome. It's neat to hear that. I mean, like somebody is helping investors through that process, right? If they do have a life event or whether they just want some liquid cash back for whatever reason, right? You can help them kind of exit that deal and walk through that process. What are some steps in that process, or hurdles that are difficult for people to jump through? I know you mentioned, that obviously depends on how the contract, operating agreement, PPM, those things were set up. It's probably one of the first things you're going to ask for, right? Or to see how those were set up in the beginning. But what are some common things you see that maybe the investor needs to know or to ask for? Maybe, yeah, let's talk about that. What should they be asking before they go into a syndication from your standpoint, so they know they're able to get out or use somebody like yourself, your services, so that's even an option in the future?
Sure. Simen, you want to start, and I'll supplement if I think there's something else.
Yeah, sure, absolutely. No, I think it's important to understand your rights, and they're like, every set of syndication documents are slightly different. There's every flavor out there, and understanding what your rights are with regards to exit is key, because the GP, will write in obviously the terms that they prefer most of the time. Some GPs are very reasonable, some are not. So it really depends on understanding what it will spell out in the documents what your rights are. They come, there could be rights of first refusal for the GP to buy your position, and there could be limitations to transfer. Almost always a GP want to have a say in the process. I think, a good starting point is obviously a conversation with the GP. I think that's where we start as well. Like it's hard to do anything without having had a conversation with a GP and understand what their motivations are. You don't really know the deal until you've spoken to them.
So what about the relationship there with let's say the operator? Somebody wants to exit the deal. They come to you all and say, you know what, I think, you all could help me to gain some liquidity here, or whatever life events happened. How do you all work with the operator just to help make this transaction as smooth as possible?
Sure. So, I mean, it all begins with the conversation, right? If an LP comes to us and says, I'm in a big fight with my GP and things are contentious and so on and so forth, that's definitely, not necessarily a red flag, but it means, well, we have to talk to the operator. And that's probably the first step in a situation where we know things are contentious. Most of the time, things are not contentious. So the first step is just to kind of get our minds around the deal. So we'll sign an NDA with the LP, get some documentation, kind of put our minds around it, see if it's even sellable, because not all deals are sellable. It's just the fact of the matter. Not all deals are sellable. And if we think we can help, when you say, well, the next thing we need to do is have a conversation with your GP. We need, I haven't seen one operating agreement yet that doesn't give the GP the right to deny a sale to some. There's always approval rights for the GP in every documentation I've ever seen, right? So we go back to the GP and we just say, look, we're not here to cause problems. We're not here to bring in an activist investor. You don't want to LP, and this is true from their point of view as well. You don't want to LP in your deals that's unhappy. They can make your life miserable. They'll call you every 5 minutes about why, you're not selling the building or what you're doing to market the building or so on and so forth. The other thing is the network of investors that we deal with are really institutional money. And we don't mean institutional like BlackRock or PGIM or these giant institutions, because those guys only write 30 million checks and above, right? And that's so. We mean institutional, like opportunity funds, endowments, family offices, so on and so forth, that still qualifies as institutional money. So from the sponsor's point of view, they're actually being introduced to a whole new source of capital that, if they have ambitions to, climb the value ladder and do bigger, more profitable, more complicated deals, or just to expand their current platform and do more deals, it's actually a new source of capital they're being introduced to. So instead of, their wealthy lawyer friend Bob, they're being introduced to XYZ Opportunity Fund that has, infinitely more money than Bob does, right? So it's actually a really good proposition for the GP in most cases. And most of them see that value proposition because most GPs that we've ever dealt with are professional and have some ambition.
Is there an amount that you're typically going to work with, or do you find, is it the investor that just invested 50,000, or that you're going to help, or is it going to be somebody that's, I don't know, is there a limit?
Yeah, I mean, look, I'll take that one. I mean, from an economic standpoint, there's a limit, right? We live off, we charge a commission on doing a transaction, and we need to cover certain costs. Like we have costs in terms of onboarding, KYC, all these kind of things, right? So there's like a base amount that we need to charge, and because that is a certain amount of money, we don't tend to go below a certain limit. So for us, really, sort of $500,000 to $1 million is kind of like the bottom line there. It depends a bit on the complexity of the deal and what's involved. That said, like, there are solutions for there are funds out there looking for like your 50K, 100K position selectively, obviously, but we can certainly point people in the right direction, even though it might not be something we can put a hands-on service to and kind of help expand demand for. There are sources out there. So but it's not for us to get actively involved and do the whole process and create demand for it. It needs to be a certain minimum threshold. Otherwise, it costs too much, really.
Sure. No, I can completely relate to that or agree. If you are not able to raise millions of dollars quickly and do not understand some key things your investors are looking for, you are not going to close on your next acquisition. If you're looking for some help to explode your syndication business and wanting to learn from someone that has been in your shoes, I'm ready to help you. I am taking on a few clients over the next 3 months to ensure their success by learning the things that have helped us to be able to raise over $10 million in 10 hours numerous times. If you are someone that is motivated and ready to take action, apply on our website to see if you qualify. What about just some pros and cons? I know there's pros to being able to, for somebody to get their liquidity or get their money back, if they need it, like you said, for some life event, whatnot. Any cons to, to this that maybe people aren't aware of coming out of a deal earlier like that? I know you mentioned like selling it, at a lower rate, depending on what the shares are, but anything else that we should be aware of? A lot of times it won't matter if there's a life event, you have to have the liquidity, but anything that they should be aware of.
I'd say.
Sure. Okay, go ahead, Simon.
Yeah, I was going to say, look, with every type of transaction and every type of, these types of transaction in general, you want to consult your tax lawyer, you want to consult your accountant, maybe your wealth manager, to understand the implications of what you're doing. You might crystallize some capital gains, you might do other things. So I think it's important to understand and consult the network around you that you look for advice on. Like we're not tax lawyers, we're not accountants. We do a very simple small part of the process, like understanding the implications for something. I think is very, very important for someone to sit down with their advisors and talk it through and understand what this does. So that's where what I would say is important. Yeah,
I have a couple more things to add to that as well. I think most people need to realize that these positions are illiquid. And so there's always some sort of discount that people are, investors are going to place on them. Now, it's a discount to what, right? If they bought this deal 10 years ago, they probably recapitalized their position already 1 or 2 times with refinancing, right, and so on and so forth. They might have effectively a zero basis or very low basis in the deal. So if it's a discount to NAV, it's still, they're still making quite a capital gain, right? In most instances. That being said, it's all very tied to the actual deal. If there's capital calls going on, all sorts of stuff, and these LP positions don't have voting rights and there's capital calls going on, well, then someone who's going to step in is going to be taking on the risk that you're stepping out of, and there's going to be a cost to that shifting of risk, right? So, of course. So, it's a negotiation like everything in life and everything in real estate. I guess maybe besides what Simen mentioned with, the tax consequence, so on, which we're not, we're not tax advisors, as he said, is, you're also stepping out of a deal, and there might be future upside to that deal. And maybe you just aren't in a position to take advantage of that upside because you have a life event or you just need the liquidity or whatever the case may be, but, we're looking at a deal in New York, and they had very low debt on the property, like a couple $1 million, and it was probably, I think, a $50 million property. And at a certain point, people are, the GP is going to refinance that deal, take on a load more debt, and everybody is going to get a big payday from that. And if you're stepping out now, well, you're going to have to, you're giving that up, right? But you're also, that's why a deal like that is marketable, because you're also selling that opportunity on to somebody else. So, it's a negotiation process.
Yeah, no, that's helpful. I appreciate you elaborating. And, anything else about, and I wanted to go back to and say, I think it's a great service. Like, and there's people that need out of a deal or whatever happens, they need a way to do that. I mean, they need somebody to help them, and somebody that can provide that equity for that operator or take that position. But anything else about the process or this type of individual or anything like that you could provide or that you would like to share before we move to a few other questions, just about the business model and the types of investors that you're helping?
I mean, look, it's a really broad spectrum. I think that's what we come back to every time. I think when we started this business, we thought the cases were more kind of similar, but what we come to understand that every new thing we take on is a separate case. There are all these varied differences why people want out or want to recapitalize or do something like that. There's so many different flavors of that, and there's so many different flavors of investors, right? I think that's a key part of what we do is to understand the person we are dealing with, understand their motivations and what they want to do, understand who they are. So I think it's such an important thing. This is partly why COVID is making the world a little bit difficult, right? Because back in the day, you'd probably meet more people in person. You do get a better impression of people that way than over a sort of a Zoom call or over a phone call. But key thing is at the end of the day, it's people involved, right? You got to understand the people, understand the motivations, and understand what you're trying to do. I think that's kind of what we lead off with. It's hard to be very descriptive on one thing, but that's kind of what we try to do.
Yeah. What about, or go ahead, Jackson.
Yeah, I was just gonna, probably a good time to insert that, because these are securities, there is a process that's followed, and anybody who contacts us should be aware that process will be followed, right? There's going to be background checks and anti-money laundering checks and these sort of things that the SEC and FINRA requires to be done when there's a securities transaction involved. A lot of people don't understand. They think they own a piece of real estate when they're an LP. They don't. They own a security in a piece of real estate. They own a position that is viewed by the SEC, FINRA, and even the Supreme Court of the United States as a security. So a lot of people are surprised by this process that they have to go through with our broker dealer and so on and so forth. So, it's just good to educate them up front. And so I took the opportunity to do that now.
How often is it the operator that's contacting you instead of the LP?
I'd say that's very often, right? I think even when it concerns an LP, we might get a call from the operator rather than the LP themselves, right? If the operator is fielding calls from 3 different LPs who all want out, it's probably better to have a macro solution where you kind of go okay, are we doing a full-fledged recap here? We're going to take some people out and bring in one new investor, or are we going to, recycle a lot of capital here? So yeah, and honestly, it's an easier process because obviously they hold a lot of the power in the deal. So when they're driving it, it's just so much quicker, should we say. It's easier to deal. So yeah, I know it happens a lot, not just for their own money, as I said, but also for their LPs. Come across a number of examples like that.
I have it. So maybe it's helpful for me to share an example. There's an operator that has about 3 projects that they did. Well, not projects. They're kind of value add opportunities that they did with a couple of LPs, and those 2 LPs wanted to maximize their returns, so they required for them to come in with this operator, that the operator also place a piece of preferred equity in the capital stack. Preferred equity is at best 12, 13%, right? And so the operator was never completely comfortable. That's not the kind of capital stack he likes to see, a cleaner capital stack, lower leverage, not as much risk. And so this operator is looking for sort of a global solution for these 3 assets, which is get rid of this preferred, because I'm getting rid of this preferred, these other LPs have already said that they would take their chips off the table and leave the deal. And also we've had these properties for a while now, so I've built up some equity. I want to cap out some of my equity. So it's kind of, a lot of times it is in our business, the GP driving the bus, because it's not just about one singular life event. It's about, reconfiguring the capital stack, pulling out some equity because they want to put some money down on some land that they want to develop over here. It's, the solution is maybe a solution for many different problems that they have in different places that aren't necessarily related to this deal. So.
Yeah, no, it's just interesting. It can be very beneficial for the operator or the LP, depending on who's reaching out to you. What about, do you all have any predictions just for the real estate market over the next 6 to 12 months? Anything you expect or anything that, anything you're predicting?
Do you want to start off, Jackson? I mean, obviously we could talk for hours on this, but what do you say?
Yeah. So look, I think there's been a lot of money raised for distress, and I think there's going to be distress in certain property types. I think retail, it's obvious to anybody who's in the markets. I think that hotel and retail, depending on geography, is going to see some distress. I think there's a lot of deferred financial maintenance in the property markets. I think we're starting to see that distress. I also think that the distress is not going to be nearly the levels that we saw in the last cycle, right? In the 2008, 2009 financial crisis. I don't think we're going to see that amount of stress. I think that lenders, so on and so forth, are far more willing to work things out if it's not, CMBS or some other structure that doesn't allow for that because it's just too rigid. But we're seeing some deals come along right now that have signs of distress. But I also think I'm not naturally an optimist, but I'm optimistic that I think that, the U.S. economy is going to snap back pretty quickly, and things such as hotel are going to see, and again, depending on geography, are going to see their businesses come back pretty quickly. I think that you're going to see some structural changes in office and in retail that, look, habits have changed, right? So when you change people's habits, you change the kind of real estate that they use and how they use it. And habits have definitely changed around how they work and how they shop. And so you're going to see some pain and some readjustments in those two property types. I don't think that habits have changed around the way people travel. I think that there's a lot of pent up demand for travel, and people want to get out. And I think travel and therefore hotel is going to snap back pretty quickly.
Just to add quickly, just at a macro level, look, as Jackson alluded to, there's a lot of money being raised for distress. Over the last 10 years, more and more money has been allocated into alternative assets, and real estate is one category that's benefited from that at a macro level. There's an incredible amount of money chasing yield, even though treasury yields are a little bit higher as we started the year. It's still not great. And there's a lot of investors looking for that. So there does feel like there's a lot of money in the market. It does feel like there's a lot of lenders that are out interested, to make loans. So in that kind of scenario, it's hard to kind of fight the wall of money, if you will. So, our kind of philosophy is, and I'm speaking for both of us, right? I think selectively there'll be distress, but like with that amount of money chasing these types of opportunities, it's hard to see a huge amount, I would think. That's just my thoughts.
Yeah, no, it's just interesting just to get your all's take on it and what you all expect. And I ask every guest that, so it's just neat to hear. But a few final questions, guys. What about just a couple of daily habits that you are disciplined about that have helped you achieve success?
Yeah, I mean, look, for like entirety of my career, I do to-do lists. I have entire notebooks filled with crossed out items. Not because I necessarily have a bad memory. I just like and really enjoy the process of crossing something out. A bit of a nerdy habit, but there we go. I mean, it's what kind of keeps me on track and keeps me going. Sort of, you don't lose track of it. Jackson, what about you?
Yeah, so I think a philosophy that we've embraced in this company is take every meeting, take every phone call. And I think, look, you waste some time with some people who aren't serious, and that's fine. But then sometimes by taking every meeting and taking every phone call, there are connections made even months down the road where you're like, oh yeah, I remember talking to that guy about that thing, and this guy is saying this thing, maybe this, and then you start crafting a deal out of this network that you have, right? So, for us, taking every meeting, taking every phone call, talking to everybody is important for building the business.
What's your best source for meeting new investors right now?
In this environment, I think everything has to be online, right? I mean, we're networking with people we know. Look, hands down, networking through people you know has been the most successful by a mile. Then obviously, like we look around online. We try to be active and try to get our voice out there and build our profile, and that results in some. But I think at the end of the day, personal relationships is a lot what it comes down to. Because someone thinks you're doing something good, and they'll put it in front of someone else, basically, right? Yeah.
No, I just always love to hear how people are networking now, and as things have changed a lot, right? But what about the number one thing that's contributed to your success?
Do you want to start, Jackson? I'm not sure I know.
Yeah, I'm not sure I know either. I mean, that's a tough question. I'm also, as I said, not a optimist by nature, even though I'm optimistic about most of the property markets. I could have $100 million in the bank and I would still be biting my nails that maybe success isn't here yet. So look, we just work hard, right? Like we don't get discouraged. Like we talk to a lot of people. Sometimes it's a waste of time. Oftentimes it's not. And we just don't get discouraged by the fact that what we're offering or the deals that we're pitching aren't if one deal doesn't work out, another one will, and we just keep going. We just keep grinding.
Yeah, it's a roller coaster at the end of the day. This business, it's lumpy. It's about dealing. What someone said is like it's about failing gracefully, right? To be able to pick yourself up again and keep going. I think that's kind of key in any kind of deal making, and I think we've been good at that and kind of just keep going. We started the company during the middle of a pandemic that historically relies on a lot of in-person contact. So we set ourselves up for a bit of a challenge, but I think that the one, our success, I think I'd attribute to our tenacity and kind of our willingness to get back up again. So I'd say that's for me where it stands.
Yeah.
And how do you all like to give back?
What do you mean?
Yeah. Do you want to start, Jackson? No, look, I mean, for me, giving back, I mean, look, I relocated continents, and there were a lot of people that when I came over to the United States to introduce me to people and, to help me understand stuff. So whenever someone asks me about something like that, I'm very, very generous with my time. I'll sit down with people and like try to help them make connections, because a lot of the times that's our success, like people helping us make a connection. It's something I think more and more about as I get further down the line of my career, is the importance of just helping people meet each other. So that's something I try to do. And yeah.
Yeah. Also, look, we try to help as many people with their situations in our business as we can. And sometimes we know that there's a slim chance of success because just the circumstances of the deal or of the sponsor, because we also do primary equity raise as well, which means raising new equity for new projects, new developments, new investments, so on and so forth. And, we try to really leverage the connections and the network we have for the benefit of the people who are striving to do something in life. And even if a sponsor comes to us who isn't necessarily incredibly strong in terms of a balance sheet, we will try to find the right partners for them. We'll do everything we can to make our clients successful. And I think that's the most important thing that we can do in terms of our business life, not volunteering and everything else, but in terms of our business life and giving back, is not just taking the low-hanging fruit, not just helping the most successful, but helping those who you believe in become more successful and achieve success.
Awesome. Well, guys, it's been a pleasure to get to know you all a little bit and just hear about your business model. I don't think I've had anyone on the show that's created this type of business model where they can help LPs, when they're in that situation, or even operators, when they have LPs that need to liquidate one way or the other. So I think it's a really neat operation that you all have. And I just think the more people know about you, the more it'll be utilized without a doubt. And I love the name too, the SyndiGate, for what you all are doing. But tell the listeners though how they can get in touch with you and learn more about you.
Look, we have a website, syndicatecapital.com, has more information about us and our business. There's also contact forms and phone numbers. We're on LinkedIn. As I say, get in touch with us. We're pretty easy to reach. And have a conversation.
Yeah. So just to remind everybody, because I'm not sure how it's going to appear on the podcast, but SyndiGate is spelled with a G. So like syndication, but a gate for syndication, syndicate.com, syndicatecapital.com. Sorry.
Yeah.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.